So we went ahead and we scoured the entire internet to come up with a list of the 5 top stock picks for the remaining 2025. Now, this is really balancing the growth potential, risk factors, current market conditions, and everything we see going on. Now, there's a lot of different sources when you start looking at Morningstar, when you look at the Money Fool, when you look at YouTube, there are a ton of places to get information. So I want to break down this list, starting with number one, which is Nvidia Corporation. Now, we know semiconductors, AI, tech, this is an absolute monster. We've seen a huge spike within the last couple of days of this stock and overall performing exceptionally well. Looking at the June 2025 price of $154, which is the post-split adjusted in there, and a market cap of over $3 trillion. Now, they're saying in the future, this could be the absolute largest company within the United States, coming in at almost $10 trillion within the next 5 to 7 years, which is kind of crazy. So looking at the pros of this company, number one, AI dominance. Nvidia powers over 90% of global AI training infrastructures, explosive demand for cloud performance or providers and governments itself. They are the leader. They are absolutely owning 90% of global AI is an incredible feat to say. Data centers, this is what drives revenue. This is where they get their money. The growth of data centers have absolutely exploded. Exponential demand for the GPUs and AI, cloud computing, edge computing, even looking at quantum computing, the data center growth is absolutely there. They also have very strong financials, margins above 70%, exceptional cash flow, high ROIC, which really makes it a good company, including product leadership. When you look at their chips, they are some of the absolute best in the market. The H100, the GH200 Blackwell chips are the industry standard or even above those industry standards. Now, there are also a couple cons for these. Number one, the evaluation risk. A lot of people are saying trading at a premium, if they miss earnings, could have a pullback. And overall, the valuation risk that we see, meaning that it is worth a lot more than people are saying, but it shows that the demand is still there. Also, with the supply chain, we've seen this heavily reliant on the advanced chips that were going abroad. If tariffs go in place and if tariffs go in place at a high level, this is going to affect exactly what the supply chain looks like. And also looking at the geopolitical tension, that is the US-China tech and really restrictions that could limit growth not only in the US with this company, but also in China with the computing power. Now, the second one we look at, which of course is one of the front runners, is Apple. Now, when you look at consumer electronic, when you look at tech, most people have an iPhone, whether it's an iPhone using the iCloud, have a watch, AirPods. There are so many things that build the brand loyalty around this company, really making it sought after for pretty much everyone. Now, of course, service revenues, they have the App Store, they have the Apple Pay, they have the iCloud, they also have their own credit card. So starting to get kind of in there. Now, buybacks and dividends, aggressively returning capital to shareholders, absolutely a pro. And then, of course, the AI integration. Apple Intelligence, the AI suite for iOS 18, is growing and has really been a growth catalyst when you look at the stock. Now, some of the cons, the iPhone dependency. This has always been, for a multitude of years, over 50% of their entire revenue is still tied up in iPhones and the production of iPhones, where if that changes with competition in the future, that is 50% of the revenue. Now, limited innovation perception. Now, again, a lot of people are starting to say that Apple is no longer the front runner when it comes to companies because there is so many companies out there, so many large tech companies, so many breakthroughs, meaning they're kind of falling behind a little bit. And we know technology-wise, it's always been a little bit more user-friendly, but not quite the cutting-edge technology that we've seen. And of course, very similar to what we see with Nvidia, the China weakening market, iPhone sales have slowed down in Asia, especially pressure from Huawei. I think that is the competition that is over there. Now, looking at number three, we start getting into Microsoft. Now, Microsoft Corporation, this is a $2.79 trillion company. Again, cloud computing, AI, enterprise software, they are massive when it comes to the size of the company. Pros, Azure growth, strong number 2 player in cloud, right behind on the US, but it is growing at a much faster pace and could overtake them in the next 2 to 3 years. AI integration with Copilot, if you have used Copilot, just like ChatGPT, just like a lot of the other AI technologies, it works incredibly well, and they've integrated it into Microsoft Office, GitHub, Azure, driving reoccurring revenue and getting that revenue stream built up, which is again a part that Apple is missing. Enterprise dominance. This is where Office comes in. When you start looking at Teams, when you look at Dynamics, they are embedded in the corporate infrastructure almost worldwide. which is kind of crazy. And they also have a diversification where, Nvidia has a lot of AI, those data centers, those chips. They do have the gaming, the Xbox, the cloud, the software, LinkedIn providing multiple revenue streams. And we know anything about it. We love multiple revenue streams. And just like we're doing here on YouTube, guys, if you like the content that I'm providing, definitely consider subscribing to the channel because it will help the multiple revenues that we have going on. Now, of course, cons when it comes to Microsoft, regulatory scrutiny. When you look at the EU, when you look at US, there's a lot of probing the practices that are going on within the company. So they are currently under an investigation. They also have very high expectations. They are priced and really poised for protection and perfection when it comes to the products they do. Misses on the PC sales could be incredibly disappointing, making the Microsoft stock actually come back. And then, of course, competition. The AWS, the Google Cloud, Oracle. There are so many things that have to be aggressively priced on AI and what they're offering within there to make sure they're competitive in the workspace. Looking at number 4, which is one of my absolute favorite, Alphabet Inc. This is Google. This is YouTube. This is search engines, search, advertising, cloud, AI. Absolutely huge. $1.87 trillion within the company, which is kind of crazy. Now, pros, as a large tech company, their P/E ratio is only 17x. That is incredibly cheap when you compare it to the competitors, and they have a very solid, strong cash generation, which is huge. Now, the Gemini AI rollout, also with Google Search, Workspace, Android, has been incredibly successful. And when it comes to domination and really monopoly within the ad business, Google Ads and YouTube are the best in class for both of them for digital advertising overall. And they have a huge cash reserve with over $120 billion, and a very low debt gives flexibility to the company. If there is something they need to do, they can absolutely do it because they have the cash to cover it without the rising expenses of borrowing money. Now, cons for Google, of course, are the ad business cyclicality. So we know the macro shifts and marketing spending cuts. If there is a pullback, a lot of it will be in the advertising search, and also the cannibalization with AI with fewer clicks, with not as being as big when it comes to searching in YouTube, but we know it still continues to grow. And then when it comes to the cloud computing, Google Cloud is third in the market share, which is overlooked by the US and Azure. So they are coming in third. Could definitely beef that up. Now, getting outside of the tech stocks and looking at, again, one that I really do like, coming in at number 5 is JP Morgan Chase and Company. This is financials and banking, so this is not tech. $820 billion is the market cap for this company. When it comes to the pros, they are the best in class bank, leader in retail, leader in investments, top tier management. When you think of wealth, most people think of BlackRock or JP Morgan Chase. They are the two. Now, one thing to note, with interest rates going up, they are really having a huge interest net income. They're not paying anything on CDs, they're not paying anything on deposits, and they're lending out at a much higher rate, meaning their margins are a lot better because they have really big dividend revenue streams, lending, credit cards, asset management, trading. Everything is really firing on all cylinders, and strong dividends, 3% yield, which is awesome when it comes to a financial institution, consistently increasing. And they have a very large buyback program for their stock, increasing the value to shareholders. Now, of course, the big con when it comes to financial industry, interest rates. If the Fed starts cutting interest rates, profit margins may shrink dramatically when it comes to the ability to lend and the ability to borrow as a financial institution. Interest rates and the Fed fund rate have a huge part on that. Now, loan loss concerns. This is another one. We are seeing rising delinquencies and auto loans on credit cards, which can be absolutely detrimental because that is the bread and butter when it comes to a financial institution in the method that they do make money. And then, of course, regulatory risk, higher capital requirements because of the financial industry, scrutiny, the post-2023 bank stress, and even seeing a couple banks that did go out of business, which is kind of hard to see. So overall, guys, definitely wanted to cover the 5 top stock picks for 2025. And I know we're halfway through the year, so this is going to build out and know the remaining of the year and where you should be putting it. Now, for me personally, I don't invest in individual stocks, but I always keep an eye on it because when I look at my portfolios, whether I'm looking at the S&P 500 or we're even looking at the NASDAQ 100, all of these companies are kind of built in there as a large market cap companies, which I absolutely invest in those specific ETFs. All right, guys, so that's going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.